G'day folks, welcome back to another update for US crude and the US dollar. Now we'll look out for a little bit of a short-term pullback on the price after they've hit a resistance but also a bearish divergence. Before we go any further, make sure you hit that like and subscribe button to support the channel. Let's first look at the outlook. So as of today, January 15, US crude oil prices have risen to their highest level since August, with Texas Intermediate crude reaching approximately $78 a barrel. This increase is attributed to new US sanctions on Russia's energy sector, which have disrupted supply chains and heightened market volatility. Concurrently, the US dollar has strengthened, with the dollar index reaching its highest point since November 2022, driven by robust economic indicators and high corporate profits. The simultaneous rise in oil prices and the dollar is notable, as these two assets often exhibit an inverse relationship. This unusual alignment may influence inflation dynamics and monetary policy considerations in the near term. So first we start off with US crude, and for those new to the channel, we always look at the long-term trends. We've got the monthly, the weekly and the daily. And also, if you want to learn how to draw some of these indicators, they're attached in the description below. These are the moving averages of the price and also the moving averages of the CCI 150. So reference those in the description below. So what we've got here on the monthly, first off, you'll notice the CCI is broken up into that moving average range of the monthly CCI, and it's about to break higher, possibly going into a bullish momentum. The price likewise is also entered into that moving average range. So they're both neutral at the moment, but if the price continues to rise, we're going to see a break above that and become more bullish longer term. On the weekly, it's already broken above those moving averages of the CCI and the price, giving us a bullish momentum, and there's no divergence on neither the monthly nor the weekly charts. On the daily, again, it's been bullish now for a number of days, since around Christmas last year, or Christmas 2024. And if you're trading on the daily, you would have taken long trades in accordance with the higher time frame. So you always trade in the direction of the higher time frame. So if you're trading on the daily, we'll go in the direction of the weekly. So you can see there, for example, that would have taken the first long trade since around 23rd of December, and that was that period there. So again, if you zoom in, you would have taken a long entry when that CCI broke above the moving average, and also the price broke above the moving average, and that would have returned to you if you bought it on that close of that day. We wait for it to close within that moving average range of the CCI. That gives you an early warning or an early exit compared to the breaking into the moving average of the price. So we always look for the break into the moving average of the CCI. So if you were into that trade back then, going long, you're currently up almost 10%, so it's 9.44% in about 17 days of trade if you been trading that. Now, if you look at the intraday chart, we only go in the direction of the higher time frame. So this is on the 1 hour time frame, so you would have taken the long trades during this period, for example. So going long there, for example, and you wait for it to close when it breaks below. So that would have given you that little trade there. Close it out on that candle there. That would have returned just under, or about 0.5% in 16 hours. Another trade would have been at this point here. You don't go short. Again, we only go long according to the daily. So that would have been another long entry there. And you would have closed it out when it entered that moving average range. So that would have been another little trade of about 0.47% gain in 13 days. Go long again there on that candle. And this time you would have closed it out when that CCI broke into that moving average range at the close of that one. That would have returned 2.1% in 10 days. Go long again there. And that would have been that one there. And you would have closed it out when that CCI broke into that moving average range near the top there. That was 1.4% in 5 days. At the moment, you would not have entered any other long trades, and the CCI is in a bearish momentum. So again, wait for that to break higher to be able to go long in the direction of the higher time frame. So looking at the US dollar, now on the monthly, it's currently bullish on the CCI and bullish on the price chart above the moving averages. Just as a reference, if I zoom out, you'll see here we had a bearish divergence, lower highs on the CCI versus higher highs on the price. Now that was a very long-term bearish divergence, started back in 2017. And had you noticed that at the close of that month there, back in September 2022, you would have been wise to take your profits off the table had you been going long during that period. And since then, it's actually fallen back and hit this minimum retrace at the 23-38% level, and it's been fluctuating in that range now for since around November 2022. It's finally broken out of that range, and we may see further upside at the moment, and again that's on the monthly. On the weekly there's no divergence, but again bullish movement on the weekly, higher than the moving average of the CCI and the price. And on the daily, now we did actually break above this moving average range previously, and if I was to draw let's have a quick look at the resistance. So yeah, there, that resistance would be moved now to that high there. So it's broken through that resistance previously. Now notice here as well, we've got a bearish divergence. So if I zoom in, if I draw a trend line between those highs on the CCI versus higher highs on the price, that's a bearish divergence. Are we going to see a pullback at some point, breaking lower? Now the CCI has already broken below the moving average range, so avoid going long. And we're going to see most likely the price also to pull back towards this moving average. Now if we go to the intraday chart, we only take short trades because the daily is going in a bearish momentum, and that started back in the 14th of January, so you would have just started there. You would have missed out on entering back here. That would have been probably a bit too early, because notice the daily is still bullish. So let's try and stick to the rules. So you might have started taking a short position back there when the CCI was broken below that moving average. That would have been your first short position entry at that point. And if we drew so that's currently returning 0.2% in 8 hours of trade. You're probably about close to closing it out when that CCI breaks into that moving average range. So again, we only go in the direction of the daily, and we avoid going along at this point. To support the channel more, hit that like and subscribe button and share the video. For added benefits and the cost of a coffee, consider subscribing to the Patreon page, where we look at weekly scans of bullish trending shares and insider trades that may have occurred. Thanks again, and see you in the next video.